Of all the countries where you've worked with, which countries have the most favorable tax setup,
Yeah.
and what's the worst situation you've seen?
It's so dependent on the situation. So like, because I mean, obviously, countries with a treaty with the U.S. Are better situations because we have more room to get a good tax answer. You know, if you don't have a tax treaty, we're kind of just stuck with how does the local tax law in that country mesh with the U.S. tax law, and there's really not a lot we can do, you know, other than just making sure we're utilizing both countries' laws correctly. But so treaty countries are the best. You know, Canada, UK, you know, for individuals, they have good treaty systems, especially with pensions. So, you know, those are usually good. And a lot of times, like I have connections in the Canada and the UK that those are two of the countries where you can find people that have both US tax experience and local country experience. Now, I don't personally, and I know I have a lot of friends that do both, and it works. There's people that are good at it, but I don't personally do that. Like I don't do Canadian tax or UK tax. In my experience, you end up working with two different groups anyway. You know, like even if I brought in a Canadian tax team, you're working with my Canadian tax team and me in the US, and it kind of feels like two different firms anyway. So I always refer the foreign country work. But anyway, so with those countries, I'd say it's the easiest. The worst situation, really the worst situation is a very unique one with the US has citizenship-based taxation. The only other country in the world that has that is a country in Africa called Eritrea, who also has citizenship-based taxation. It's different, but same kind of deal. But this was a person that, if I can see if I can remember right, they were a US citizen and an Eritrean citizen living in the UK. So they were actually subject to triple taxation. So, and that was really a problem that I didn't even know how to solve at first. Like because the whole point, like treaties at this point are bilateral, meaning like UK and the US have a bilateral treaty, and we figure out who gets the right to tax what income. We give tax credits, but it doesn't talk about what to do if a third country is also taxing that income. So I didn't actually end up working with that client, so I didn't get to like take it all the way through the whole process, but they were probably in the worst situation that I've dealt with. But other than that, I'd say like Latin America can be a little tricky just because we don't have a treaty network with the majority of the countries. So we're kind of dealing with their laws, and they have high tax rates too in Latin America. So, and sometimes it can be a little harder to find advisors, I've found, down there, but I mean, we figure it out, you know, whatever country it is, we figure it out.
Would the tax situation be part of your decision-making process if you wanted to move to another country?
I mean, it's definitely a part of it, and it depends on the person, but I'd say there's always a way to handle it, you know? Like if you're an individual looking to move outside the US, there are levels of international tax planning that I try to apply depending on your income, really, and your cash needs during the year, how you earn income. Are you a retired person? You know, if you're retired, there's really, as a US citizen, there's not a lot you can do from a tax planning perspective. You're going to be taxed on retirement income no matter where you live. So, you know, there's not a lot to do there. But, you know, people that have their own businesses, people that, you know, are employed, there's different levels to that consulting process. But I would say at a very basic level, level one is how do we just make sure you don't pay more tax than you're paying before and you're not subject to penalties? Because one thing, the big thing that changes when you start investing abroad or move abroad is just your tax return is going to be a little different. And there's going to be additional forms that are required, and they just have unreasonable penalties associated with just missing a stupid form that doesn't even affect your tax liability. So that's kind of step one is, so yeah, I guess to answer your question, moving abroad is not necessarily, you know, a tax question or tax motivated thing. You know, the step one is really just make it tax neutral for most people, and we can almost always get there. There's very few situations where you can end up paying more tax moving abroad. I'll take it back. I mean, if you move to a higher tax country, you're going to pay more tax. I mean, that's simple, but you're not, yeah, I mean, to move to, we can make it so you're at least not in a worse situation other than if you just choose to move to a higher tax country. That just is what it is. But, and then from there, we can look at, all right, can we actually save you money? You know, that's kind of level 2.